The Bitcoin expert said it will be a very tough time to own the digital currency over the next 2 to 3 weeks amid a barrage of negative news for Bitcoin and other cryptocurrencies. Mr. Lee, who was the first Wall Street strategist to predict Bitcoin, has a method of measuring how happy or sad investors are at owning Bitcoin using a Bitcoin Misery Index (BMI), which he warned is at its lowest levels since 2011. The BMI measures the consistency of Bitcoin to USD over the past 90 days, acting as a buy indicator at the time of a market dip. Managing partner at Fundstrat Global Advisors Tom Lee told CNBC, "Think of this as a way to measure how happy or sad you are owning Bitcoin. So it counts towards a win ratio and a volatility." Getty CNBC Bitcoin latest, Tom Lee said Bitcoin investors will be miserable over the next 2 to 3 weeks. It is really uncommon to be this miserable owning Bitcoin, Tom Lee, and this thing is telling us that Bitcoin holders are miserable. You know, it is currently at 19, its range between 0 and 100, and it is the lowest reading since August of 2011. Mr. Lee said a BMI under 27 is when Bitcoin investors are really miserable, which has occurred only 34 times since 2009. He said, "Since 2009 we've had roughly 50,000 days, only 34 of those days was the reading below 27, so it is really uncommon to be this miserable owning Bitcoin, but the last couple of times was November 2012, September 2016, January 2015, and Bitcoin was higher a month later, so I think in a way it's telling us it is very tough to own it for the next week, even 2 weeks, 3 weeks, but we're getting through this." Mr. Lee said out of all the times in which the BMI reached below 27, it was up again 12 months later, suggesting of a positive long-term impact to the latest price crash. But he warned in the short term Bitcoin investors could face miserable times over the coming weeks. He said, "But in the short term I think it's a signal of pain, because obviously if you're miserable holding Bitcoin and you get headlines like we've had this week." Tuesday, January 16, 2018, Bitcoin climbed back above $10,000 Thursday for the first time in 2 weeks. I wouldn't be surprised if investors wanted to get out of Bitcoin. Bitcoin trading was down 22.5% against the US dollar last week amid fears of tighter regulation on Bitcoin and other cryptocurrencies such as Ripple. Bitcoin took a hit on Wednesday after the U.S. Securities and Exchange Commission (SEC) announced it will require digital asset exchanges to register with the federal agency. Prices plunged by more than $1,000 in the space of an hour, falling from $10,673.03 at 4:40 p.m. Greenwich Mean Time to $9,481.45 by 5:22 p.m. Greenwich Mean Time on Wednesday, according to CoinDesk. According to the SEC, digital assets moving through exchanges need to abide by federal laws to protect investors' best interests. The SEC said in a statement, if a platform offers trading of digital assets that are securities and operates as an exchange, as defined by the federal securities laws, then the platform must register with the SEC as a national securities exchange or be exempt from registration. The SEC staff has concerns that many online trading platforms appear to investors as SEC-registered and regulated marketplaces when they are not. Many platforms refer to themselves as exchanges, which can give the misimpression to investors that they are regulated and meet the regulatory standards of a national securities exchange, but the Bitcoin price is up 0.04% at 8:25 GMT on March 12 at $9,534.67. It saw its highest value before Christmas when it reached the monumental price of just under $20,000.